Right, come on then, folks, as we head into European trade on Friday, the 21st of July. We're stuck in the markets. We'll see what is going on. We had a bit of downside in risk assets yesterday, a bit of upside in the dollar, which we had been looking at on yesterday's video, which we'll jump across some charts and we'll see what we can find now once we get around to it. Apart from that, you're not got really too much to go on. I mean, you can see Asian shares were subdued on Friday after earnings reports from Tesla and Netflix failed to dazzle. It's still sentiment from the day before, while the dollar and treasury yields held gains ahead of an action-packed week that could see the end of the US tightening cycle. Bets for rate hikes did ramp up in yesterday's session, so maybe that's a bit of a front runner for a bit of a hawkish Fed on Wednesday. But markets still have priced in that we're going to get one more hike and then done from the Fed. That will come then next week and be on a pause then after that. But in terms of going forward, it's supposed to be done then after that. But markets beginning to price in potential for back-to-back rate hikes or a rate hike in November. So we'll keep an eye on that. We'll keep an eye on pricing of Fed funds futures, and we'll see what we can find and what they have to say for themselves over the course of the next week. But we'll speak about that in a little bit more detail in a video later on today. Apart from that, you can see stock indexes across the board relatively mixed. You can see US stock indexes higher, European equity indexes pretty mixed. You can see Asia Pacific equity futures mixed to bearish, but not really too much in the way of that. Oil, you can see crude and Brent up nearly 1% each on the back of weak oil inventories or drawn oil inventories again from the US on Wednesday. So supply tightening in terms of the price of oil, that is lending its support to the price of oil. Commodities relatively flat. You can see bonds, yields on bonds lower across the board. US bonds lower. Everything except for New Zealand and Canadian bond yields are lower over the course of today's session, but they are not open for trading yet. What is open for trading at the moment, is Australian bonds, Chinese bonds, UK bonds, not quite, German bonds, US bonds, and all of the ones that are open are lower. So bond yields slightly lower, maybe offering a bit of support to stock indexes, but that's just a move counter to what we've been seeing in recent trades, so I wouldn't read too much into that. Apart from that, you do have the US dollar lower across the board, but we'll jump across to some charts. It's a bit of a pullback, and you are seeing a number of pullbacks on a number of different assets over the course of today so far. So I'm not going to read too much into the price action this morning, as really we had a bit of action last night to kick off or to head into the weekend. So you can see inflation out of Japan this morning lower than consensus, which is not the trade I was hoping for personally. I was hoping for a beat on consensus, higher than anticipated. Japanese inflation caused the central bank really to start thinking about altering monetary policy, but unfortunately we did not get that. We got a miss on consensus, so it doesn't really offer us the sort of price movement that we were hoping for. Overnight retail sales higher than consensus, and again that does not go in line with the weak inflation prints, so that itself doesn't give us what we want in terms of selling sterling. So yeah, a little bit disappointing data from a trading point of view. You want this data to line up with the kind of context. Higher than anticipated inflation, with the Bank of Japan having ultra loose monetary policy, them altering that would cause massive moves on the Japanese yen. See that weak inflation or weak CPI print during the week on the UK or in the UK. You see retail sales still posting positively. So yeah, they're kind of one positive, one negative, and then Japan doesn't really go in line with what we would hope the central bank would do. So it doesn't really offer us much, unfortunately. You see a slight bit of a pop higher on cable, but nothing too much really. Dollar yen pretty unchanged. We like a lot of the US dollar pairs overnight. You can see Aussie, Kiwi, Euro and Sterling all having substantial downside yesterday. You can see dollar yen, dollar CAD and the dollar index all having substantial upside. You can see dollar Swiss was going through the roof yesterday. Euro dollar, or should I say the dollar index, has reached that level that we had earmarked on Monday. Reached it pretty well. As you can see, we'd mapped that level out on Monday for an upside target over the course of the week for the US dollar. It looks, that was the level we said sell it at earlier on in the week, but after that aggressive move yesterday, it's a bit of a difficult sell. But you had your double bottom, you broke out through it, retest your neckline in through here, and they continue higher back to it. But now that's interesting. I mean, you have rallied, you have the bit of a pullback the markets are hoping for, the liquidation of shorts, clear some shorts out, but there is it's just a bounce back for now. I mean, it is against the trend. It's against that trend from here, but it also is against the trend that started back in September of last year. So is that enough to change the trend? For me, I don't think so just yet, if I'm being perfectly honest with you. You're back in to test this previous support. Now resistance at the round number of 101. And it just does look like a bit of a flag to want to continue higher, doesn't it? So yeah, maybe a bit of a tricky one. I'd still probably favour selling that, especially if markets continue to believe that the Fed will be one and done. But the Fed are not one and done. One more and done, into next week. It should then probably pop higher. But is euro dollar through the level that we were looking at earlier on, and again, or earlier on the week, and again, this is just looks like a bit of a flag to want to continue to move lower. So it'll be interesting to see how markets react. I've got great levels really to work off. Maybe I prefer a bit more of a pullback personally, maybe into something like, I mean, in terms of like looking for entries, personally I'd prefer something like that. You get a Fibonacci retracement done as well, and have a retracement back into that 50% level. That would be something that I'd prefer to keep an eye on in terms of a pullback back to then. I'm not the biggest fan of these flags personally. There's no clear entry point, no clear point in time where you can pull the trigger. So yeah, it makes it a bit tricky for me. Looking to try to get involved in something like that. But apart from that, I mean, the trend on the dollar is still down. This is just a bounce back for the moment. Something we were expecting over the course of the week. Markets gave us a reason for it with those bond yields pushing higher. If they go lower over the course of today, you probably see the dollar roll over again, and then coming back to equities. You see the downside in yesterday's session, a little bit in the S&P, a bit in the Nasdaq, pretty aggressive on the Nasdaq and the Russell. But if those bond yields start to push back lower again, I reckon it'll probably be supportive for stocks. So something worth keeping an eye on over the course of today's session. But that's pretty much where we're at. Maybe the dollar turns around again. We'll have to see. Head towards your forms of analysis. But there's no great levels around. Makes it a little bit of a difficult trade for now. So unless you're down smashing the lower time frames, best to look at that. But it's a pretty difficult one this morning in terms of predicting some direction. I've got it right this week. Maybe it's time to rethink things and head into the weekend. But we'll have another update or another video later on updating on next week's price action. We have a couple of central banks, a bunch of earnings out next week, so we'll update that a little bit further next week. But I would keep an eye on those yields heading into today's European session. Keeping an eye on those yields means you keep an eye on US dollar and the price of gold as well. Equities, if those yields do push lower, should be supportive for equities, and those overall trends, those long-term trends, may kick back into play. So that's probably what I'd be keeping an eye out for over the course of today's session. And best of luck if you get into any positions.